I took 10 trades using the most common chart patterns and achieved 7 wins. The interesting part is that these patterns are very simple and can be found almost on everyday charts. If you understand few basic chart patterns and know how to use them correctly, you can significantly improve your trading accuracy. In this video, I'll show you exactly how to identify these patterns, when to enter a trade, and how to avoid common mistakes. So without further delay, let's get started. I am looking to take a call entry right after this green candle closes because I can see a pattern forming that is known as ascending triangular pattern. Some of you might be thinking that there is another pattern here, a red candle followed by a green candle repeatedly. However, from my experience, candle color pattern alone is not very reliable and often fail to provide consistent result. Instead, I prefer focusing on chart patterns and market structure because they give stronger confirmation and higher probability trading opportunity. In this case, the ascending triangular suggests that buyers are gaining strength, which is why I took a call entry right at the opening of the candle. This trade is based on ascending triangular pattern and candlestick psychology. The market was forming an ascending structure with a clear resistance level at top. As price continued to make higher lows, it showed that buyers were gradually gaining control and building pressure against the resistance. And as ascending triangular often leads to a strong breakout move, so I anticipated the breakout before it actually happened and entered the trade early. By understanding the psychology behind the pattern and by understanding candlestick psychology as well, I was able to position myself ahead of the expected move rather than chasing the breakout after it occurred. Alright traders, as you can see, the candle closed exactly below the reversal point, so I will not be taking any more call entries. The market could easily pull back and form a couple of red candles from this level. However, this gives me an opportunity to explain another very common chart pattern, the double bottom pattern. If you look closely, previously the market formed a clear double bottom before breaking above the neckline. Once the breakout occurred, buyers stepped in and the market started a strong bullish rally. This is why I was looking for a call entry. Even though the overall trend appeared to be bearish, the double bottom pattern was signaling a potential bullish reversal, and by recognizing this pattern early, I was able to anticipate the shift in the market direction and focus on buying opportunity rather than following the existing downtrend. Alright traders, let's look for another high probability trade opportunity using some chart pattern. I can already see a potential buy opportunity forming in this area. Once again, we have a double bottom pattern followed by a breakout. So after the breakout, the market has formed a red candle, which I identify as a retracement candle. Based on that, I have entered a call trade. However, in the hindsight, I should have waited for one more red candle because the neckline had not been tested properly. What I mean by that is there is a double bottom pattern, but this particular neckline has not been tested by this red candle. So there was still enough room for the price to make a deeper retracement before continuing higher. That is why I decided to take only one trade initially, even though this setup is valid, but losses are normal. And look at that. This current candle is forming as a red one, and I assume that this particular red candle is just a retracement candle. So even if I lose this trade, after closing this candle, I will be taking my multiple call entry trade right at the opening of the next candle. With this red candle, my setup has become more stronger. The candle that formed is a spinning top, which signals indecision in the market. More importantly, its wick has properly tested the breakout level of our double bottom pattern, giving us additional confirmation that this breakout is holding. Because of this, the setup has now higher probability of success. I have placed my multiple call entries, although I must admit that I got a little excited and some of my entries were taken a bit late. Nevertheless, I still expect this candle to close as a bullish candle. Let's see how it closes, and based on the candle behavior, I'll decide whether to take my next entry as well in the same chart. As I mentioned earlier, some of my entries were not ideal, which is why I might end up losing few trades. However, my overall analysis was still accurate. This candle is going to close as a bullish candle, exactly as I expected. The strong green candle has suggested me the market wants to continue its upward movement, since we already have confirmed it with the double bottom pattern breakout and a complete retracement. The condition were in my favor for bullish momentum. Based on this confirmation, I'm going to take another call entry right at the opening of the candle, back to back on the same chart. While my entry timing could have been better, the setup itself is already very strong, which gave me confidence to take this trade as well. And look at that. This candle is getting a strong rejection from the downside, that is, buyers are actively involved. And just as I anticipated, this candle is closing as a green candle, confirming the continuation of the bullish move and resulting all of my trades going in my favor. And look at that. This is a beautiful, healthy green candle. All right, traders, I hope you understand how you can incorporate chart pattern in your next trading session. If you want to copy my trades, you can create an account using my link and join my Telegram channel. You can find the link down below in the description box. I'll come back with another powerful video. Until then, keep learning, and as always, happy trading, guys.